Okay, perfect. Okay, cool. So I'm going to start off. So what are we doing here? So I have Shardul with me, and we're going to have some fun today by going through and playing around with Claude on top of the backtester that we wrote and see if we could come up with some cool strategies, or at the worst case, just run through some ideas, right? And what I've found is you might have a strategy idea and it's hard for you to go through and like paper trade it or whatever. So smart people like to go through and do backtesting. Well, in order to do backtesting, you have to go through and either do it yourself or buy expensive software. So what we've done is we've created a backtester and we've been using it internally. And we're going to show you how to use that and then how we can use Claude on top of that to run any strategy idea that you may have on top of it. And I think we're going to have some fun and you're going to learn how to use AI on top of an open source backtester repo that anybody can set up. And as long as you have, I think you could even do this on the free plan, but if you had the $20 a month Claude plan, you could really run down some rabbit holes, rabbit trails or whatever to really kind of prove out your ideas and see what works, what doesn't really quickly instead of just manually going through, putting them into a backtester or whatever. So a little bit about myself. My name's Zach. I run a family office in the Midwest. And about a year ago, I started building a backtester for our internal stuff. We were coming up with strategies. I wanted to make sure before I put the money into the market that I was actually putting money on sound strategies. So I started building this little backtester just for myself, and I had to add things along the way. And now a year later, so this month is July of 2026, we're celebrating 1 year of this thing being created, and it has grown to a point that didn't even think was possible. And a lot of that is due to this very person on the live stream now, Shardul. So that's a little bit about myself. We built it internally. We've been using it. Shardul came along and really has elevated it to the next level. And we're just going to kind of play with it today and go from there. But I'm going to hand it over to Shardul and he can kind of introduce himself.
Hello guys, what's up? Myself Shardul. So I'm working with Zach, and to my background, I just finished a master's in data science. So I met Zach through LinkedIn. He was just wondering something about market strategies, and maybe he was building on something because I didn't know exactly what I was going to be doing in the future. So I just connected through him to LinkedIn and got to know exactly what his thinking was to do exactly. He was trying to make a backtester, but currently we are way beyond that. We are completed our backtester. It's still in the process of making it robust to use by everybody. And even I guess I was one of you guys because I started with looking at the charts, looking for long-term investing, making some strategies of my own. So I can relate you what you guys want, because even I thought I have a perfect strategy that I just look at one or two instances, it worked yesterday, it worked day for yesterday, and definitely it's going to be working for next many years. But that's not the case, because that's what I learned throughout my whole journey. So we are making something what everybody can use, and everybody can get a legit, and they can see not just last two trades, but they can see last 1,000 and million trades, exactly how the strategy is working. Not just making something just working for 2 days and just losing some money over some good hedge funds. So we are making something which can be used by anyone, not by somebody who's into tech or somebody who's into finance for long term. So here is we will show you exactly how everything can be implemented. And I think everybody can use Claude because it's kind of a human friend. It's not like something you have to code something like that. You can just talk in your own language as well. You can just open a mic and just talk to him normally and just tell to backtest the whole strategy for you. And within 10 minutes or 5 minutes, it will give you the whole PDF exactly how your strategy is working, looking at the last 10 years data or last 15 years data. And everything in this backtester is completed. Like you don't have to worry about the data or anything about that. You just have to worry about the strategies that you're making. You just have to do the thinking that what your strategy will be looking at and just give to the Claude, and it will be completely reforming everything that you want, and you can just look at the end picture and not to worry about what's going in between. So that was the whole picture, and like Zach will show you exactly how will everything be working from now on, and how little things that you have to focus and what is the big picture we'll be getting out of it.
Yeah, for sure. Yeah, and you brought up a really good point, which is it's kind of like, your colleague, where you can just go through and just say, Claude, what if this thing? Like, a lot of times I'll be like making dinner and I'll just bring up my phone because I have Claude on my phone because I'm just like super addicted to Claude. But I'll just be like, well, what if I bought and hold this thing on Friday and sold on Monday morning? Like, is that even a strategy? So then I'll just have Claude work on it. And then after I eat, I'll look at it. And then it's crazy the kind of thought processes that come up when you're just thinking out of thin air and just having Claude work on it. It's pretty crazy because 10 years ago, we had to just type all this stuff out manually, which is pretty nuts. So yeah, it's pretty cool. It's like you have your own little colleague, and we're not making any money on this on this stuff. Like we're not selling the backtester. It's open source, and obviously we're not selling Claude. If we were, we wouldn't be here right now. But let's do this. So let me share my screen, and I'm going to walk you through what the backtester looks like. So again, this is open source, and you can get to it. I'll throw a link in the video description. But like, what is it, right? It's a Python backtesting engine. We've been focusing on U.S. equity strategies. I mean, I guess you could throw this into the Indian market. I don't know. Is that even possible, Shardul? Depending on the Parquet data?
Yeah, of course, because like we just have to like commit the data in the backtester or in the database, and like I have the Indian data as well, so I can do it, and all the Indian audience can get that as well. So it depends on which data you want, you can do that as well.
That's cool. That's cool. Yeah. So you kind of connect different data providers to it. So like if you're using Massive or what used to be called Polygon, we have a wrapper for that. Obviously, yfinance, which has its pros and cons. If you're using Norgate, if you got big boy money and you're buying Norgate data, we got a wrapper for that. And then you can just slam all your data into a Parquet file as well, which is even cooler. So there's no like gatekeeping on this. I think anybody should be able to kind of pick it up and go from there. We have a lot of quant level metrics, which I'll have Shardul kind of get into the weeds on that later on in the live stream, just because some of it's over my head, but some of it everybody needs to know when they're kind of looking at a strategy, if it has legs or not. And the biggest thing is it creates a PDF for you. So you can share it, look at it, whatever. So if you were going to set this up, it's open source. You would just go to this URL. I'll throw it to you in the chat or in the description. And it really just tests any strategy. And I've tried to make the README as clean as possible, but there's a ton of information here. And some of that you don't really even need to get into. If you're interested in how it works, obviously go through it. But here's what's going to be awesome is you have this framework. So what we're going to do is we're going to have Claude connect to it. Now, I'm not going to walk you through how to get Claude on your terminal. I'm going to assume that you either know how to do that or you could just use Claude to tell you how to do it, honestly. So I'm going to assume that at this point, you know how to get Claude into your terminal. If not, pause the live stream, get that set up, and then we'll go from there.
Like we have many videos on the YouTube. You can just watch it. It might be a minute or two, and you can just come back to this.
Yeah, for sure. For sure. Secondly, you're going to want to download the repo onto your computer. Now, if you're not too tech savvy, you could just have Claude do that. Now, if anybody that's watching this has any issues, leave a comment. I'll definitely walk you through that. It's not as bad as you think. But let's say you get your terminal up, and let's say you have the repo downloaded. So I got it downloaded right here. I'm sitting right in where that repo is. So I'm just going to type Claude. Give it a second. Okay, and I got Sonnet, but I'm going to go to Opus model, and we're going to use that model. It uses more tokens, but it has more context, so you can put more information into the brain, if you will. And as of right now, Fable 5 just came out, which Shardul and I have been doing a lot of Fable 5 stuff, which has been pretty cool. But for right now, we're just going to do Opus, and it's kind of the biggest model that is kind of open friendly. We're just going to go from there. So as of right now, Claude is just sitting on top of the backtester. Claude can use the backtester however he wants. So now we just have to come up with some sort of strategy. So this is where the fun part is. So I really just want to have something that we can run through here, that we can just kind of show the viewer how it works, but that might have some sort of edge. So what do you think? What do you have any ideas, Shardul?
I mean, of course, why not? Because since I'm a discretionary trader and looking at the charts just make me feel like I can do this.
Yeah.
Like I always had this feeling, like when I see the RSI, because I'm pretty sure all the people like looking at the charts, RSI is the most friendly indicator they can be coming up,
Yep.
and like the exponential smoothing averages as well. So I have one strategy with that. So like what we can do is on weekly time frame on stocks, we can use like the RSI divergence for bullish and bearish. So whenever we have price and RSI diverges, we can buy. And whenever the RSI diverges in the upper part, like when the RSI is in the 70 or 80 range and there is a bearish divergence, we can sell the stocks, and we can just wait until the EMA of 20 is crossed by. So we can just cross check exactly how things work, because I have seen that work pretty much all the times what I have seen. But let's see, we'll get the reality check exactly how it works and through the backtester.
Okay. Yeah, this is great. So I'm starting to have fun here because we have this idea. We've seen it in the charts happen all the time, but we have no data to back it up. And if you go to Twitter, you're going to have some guru with no data tell you this is like the most fire strategy ever, but there's no data behind it. And people like Shardul, he needs data. Otherwise, we're just talking. So I think that's pretty cool. I think the first thing is I'm going to tell Claude, get up to speed on the backtester and how it works. I want him to get all the context. What he's going to do is he's going to grab that huge README file that I showed you. That's probably 20 pages long. And he's going to put it into his brain. I don't have time for that. That's why I'm paying.
We don't want to read the whole thing.
Yeah,
And
I don't want to read all that. Yeah,
exactly.
that's why I pay $200 a month so he can read all this stuff. So while he's doing that, we got to start. Okay, first, you have the strategy idea. That's cool. What stocks do you want to run this on? One single stock? Do you want to have it on a basket of stocks? Do you want to have it on a sector, like just the semis or just energy? Like where do you want to run this on? Let's figure that out first.
Since the USHB is really big, let's start with something small so we can do it pretty quick. So let's start with
NASDAQ. Okay, cool. And I think the backtester comes with NASDAQ already.
Yep.
So we'll figure this out. Let's see, make sure you're on the main branch. And I'm just saying that just because I'm doing active development on this, but I'm already on main already. So cool. Okay, cool. So I'm just going to talk to Claude just like I'm talking to, somebody that I need to work with. I want to run a strategy idea. I want to run this on the NASDAQ. And I want to use Polygon API source. Now, if you don't have Polygon, you could say I want to run it on my Parquet files, or I want to run it on yfinance or whatever. But I have Polygon already connected, so we're just going to do that on the daily time frame. I assume that's what you want. And then, so now you got to tell me what the strategy is. So tell me what I should type.
So we will be looking at the weekly time frame, and we will be having a RSI, yeah, weekly time frame,
Okay.
and we will be focusing on RSI. That is length of 14.
Less than 14?
Length of 14. RSI
Oh,
length
got
should be
it.
14. And whenever there is a RSI and a price divergence on a weekly time frame,
Mhm.
so it's either a bullish divergence or a bearish divergence. If it is bullish divergence, we will buy. If it's a bearish divergence, we will sell.
Okay, cool.
And we will try this, and there will be a stop loss and target. So stop loss can be ATR based, since it is the most famous one because everybody loves ATR. So we'll be having ATR based. So let's test this strategy. That's a basic one.
Okay. How you gonna, okay, and you just basically sell it when it flips to bearish, basically?
Yeah.
Okay, cool. And I'm just gonna say run the time period as far back as the data provides, because I forget what time frame we have at Polygon. It's probably 10 years, but 10 years is okay.
Yeah, it's 10 years.
I mean, there's a lot of discussion on how long you run your back test for, but we'll save that. So I want to run a strategy idea. I want to run this on the NASDAQ. I want to use my Polygon API source, and I want to run it on the weekly time frame. I want to focus on the RSI length of 14, which is standard. And whenever there is an RSI and a price divergence on the weekly time frame, either bullish or bearish, if bullish we buy, if bearish we sell, stop loss is ATR based, run the time period as far back as the data provides. Okay, anything else, or are we good to go?
I guess we are good to go.
Okay. So now you wait, and let's see what Claude's doing. And depending on your strategy, this could take a minute, but so he's going to look at the config file. So if anybody's into how this works, and if you were going to run this manually, you would go into the config file of the repo and you would set where the data source is coming from. You would then hand code a Python function that does everything we just said in Python. And you would add that into the indicators.py area. We don't have to do all that. That sounds horrible. That sounds like what I did in my 20s. So now Claude does this for us, and we just hang out. I like watching and seeing what Claude does because it's kind of cool. And also, he might do something stupid, so it's good to watch him.
Like as a coder, like the people who are in tech, they can still do it, but the people who are not from tech and have this passion for markets and everything, just imagine how the problem will be for you guys, because the thing is, you will look at 100 different stocks, you will go back 10 years and you will look at every other chart and be going from one chart to another stock to another sector, or like this backtesting. I'm pretty sure it will take months and years for you to get with a perfect strategy, and that too, you might be getting one strategy, but the time you have been wasted, you might not get it back. So this is what you can just do it for, like afternoon, and that's all. And if you have one strategy that is working, you can check forward test and just go with it. So it is pretty easy as compared to when you do it manually.
Yeah, 100%. Yeah, because if you did not have Claude on top of the backtester, you'd have to do all this stuff manually. And right now it's 1:30. The market's open. Somebody's making money and losing money right now. And we're not in the market. We're trying to come up with ideas. But if we had to hand code all this, my lands, it would take forever. So we're trying to use Claude as a force multiplier, like a time saver, so that you could run this. I mean, personally, I have like 8 of these guys running. I think the longest I've had this run was probably 8.5 hours. What about you, Shardul? What was the longest you've had this run for?
The thing is, I have both because Claude gives you some restrictions. So I have
Yeah.
ChatGPT Codex as well. So
Nice.
I do a kind of mixing. Like sometimes I go with this, sometimes go with this, but it's running. So at least like I have the maximum I have went is the overnight. So I guess 7 to 8 hours, the same as you.
Yeah, that's crazy. That's crazy.
I just sleep. I just let it work throughout the day.
Yep. Yep. Yeah. Unfortunately, humans have to sleep, but Claude doesn't, which is really cool. Now, if Claude had to sleep, I would be upset. But okay, so he did a dry run just to make sure all the code was correct. He went through the config file. He went through all this stuff and added the code manually. So if you're interested, you can watch. He added the start date of 2003. Time frame is weekly. Minimum bars is 100. NASDAQ, ATR based, and he created a strategy and named it RSI-divergence. So he just took everything that Shardul said and went into the code and rigged it all up. So let's see. The actual time period is 2006. What is this? Give me some known cache validation stuff. Okay. We'll see what happens. Data period is only 2021. Okay. So we're going to get a short time burst on this because I don't have a very long time period at my Polygon plan, but we have other ways of getting data in here. So we'll play around with that. But all right. So basically the run is running and now the run's complete. Okay. So this is where it counts. I'm gonna make this bigger, I guess.
I mean, it is very handy. Like I am sometimes in my gym, I just think of some strategies that can work, but I have no time to test it. I can just tell Claude through my phone, just does this, does that. You never know, like something might work for you, something might not. So of course, why not just throwing some random idea that comes up in your head at night at 2 a.m. You can just test it out.
Yeah, 100%. 100%. Yeah, you might as well, because your idea is going to be going all over the place. So you're at the gym, you're doing 2 plates on bench as a warm up, and you're just like, well, what if I did this RSI strategy? So he's going to give you the data in the terminal, 444% value, total P&L. So it did beat the SPY and it did beat the Q buy and hold. So as I was building this, a lot of strategies looked great. And then when I finally compared it to the buy and hold, like what if your grandma just bought SPY, forgot about it, and then you turned around and she realized she had it? Grandma might have made more money than your stupid strategy. So I start layering in SPY and the Q to make sure that the strategy that we're building is better than the buy and hold of just the SPY. So we get the Sharp, which is just a fancy way to calculate, which I'll have Shardul go into that later. And then the max drawdown, which I think everybody should know what the max drawdown is. So what is the max amount that I lost money on this strategy? So at some point, if I had this strategy, I would have been sitting on negative 33%. That would have been psychologically pretty rough. So we got the calmer, profit factor, win rate, 37%. That's a low win rate. And then out of sample P&L, Monte Carlo, and which I think Monte Carlo is a car from the 70s, right?
Yeah.
Okay. That's pretty cool. Okay. And then the smoothness.
Make a PDF so we can just show exactly how
Yeah.
the end
Yeah.
product will be looking.
Yeah. Okay. Perfect. So you're probably looking at this, you're like, okay, cool. That's great. It's in the terminal. I can see some data. Awesome. Well, I mentioned that the backtester creates a PDF for you. So you could go in the code and run that manually if you wanted to, or you could just tell Claude, create the PDF report.
I mean, that's the beauty of the using Claude over the backtester, because you might be thinking, like, looking at the last 2 trades, this is 100% winning, because this is like for last 2 trades what I checked, it's completely 100% winning strategy. But when you go and check for last 5 years or last 10 years, the winning percent comes out to 37%. So that's how you segregate the whole thing, what you are thinking in your mind, and when you come at backtester and you get the reality check. So this is not a strategy I would rather go with, just looking at the two instances. But when you look at the bigger picture for last 5 to 10 years, it shows that it only succeeded 37% of the time. So this is something a red flag. I would not go for the strategy, but I'm pretty sure you will be having some of the strategies that definitely you can go ahead with much more in-depth information and all the things what you have observed in the market going through and forth. So just put your experience, because I'm pretty sure all the people who will be watching this video will be somewhere related to market since last many years or many months. So why not just check this out?
Yeah, 100%. 100%. Let's do this. Sweet. So I'm in Mac, so I can just click it. Okay. So this is where we finally get some data. 400%, 445% return. So walk me through what a CAGR is. What does that mean?
So CAGR is something what you like. For example, if you're running a strategy which is automated or like your manual trading, so the profit you will making every year, but it's not guaranteed every year. So basically, when you look at the last 5 years and what is the average profit you have made for the whole every year, looking at the last 5 years, that is something CAGR gives you. So that should be a consistent one, because that shouldn't be something that is underperforming the market.
Nice. Okay. Now, a Sharp is basically just like some sort of mathematical representation of how risky it is. Is that true?
Yeah, it is. Like it depends on it's mostly about risk reward award, like risk to ratio, what you're looking at. So how much you're willing to risk for the percentage what you're expecting. That is what you Sharp gives you. So basically everybody has stop loss and target. So is your stop loss good enough for your target? Because for recent times, like you can see the SanDisk share, like if you invest at the top and you are expecting much more like growth from there, it is really wrong, because it's already moved a lot. It might not work afterwards. So that is where the Sharp ratio will come across.
Okay. I see a lot of people that are always like focused on the Sharp, and you'll always come across somebody that says they have a Sharp of 6. And that's usually garbage when you get into the data. And I've seen bad strategies have good Sharps, and I've seen really good strategies have low Sharps. So as the journey of you going through figuring out a strategy, don't get married to just I have to have a Sharp of +1. But it is kind of something to put in your tool belt of like you're kind of painting the picture, and Sharp is one of the colors. You want to look at it. That's just kind of my feedback there. Profit factor. So what is it? You risk $1 and you get $2.50 back, or is it the other way around?
Yeah, it's the same thing, because when you risk $1, how much you're expecting your strategy to work at. So if you're risking $1, you will be getting 2.5 instead. But that's what you are coming up with the winning rate, because if there is a low winning rate and high profit factor, you will be still good. But if it's the other way around, it will be a problematic situation, because sometimes I have seen my friends having 90% of win rate, but the profit factor is 0.5. So even they're winning 90% of the time, they're losing money. So that is something you can work on.
Yeah, that's true. That's a good point. That's a good point. Okay. So now this is where you can visually see things. And I know so you look at all these data points up here and you're just like, okay, cool. Okay, awesome. For me, I'm a visual guy, and everything is based on this visual equity curve for me. And like it gets my heart just going crazy because this equity curve looks like garbage. And so walk me through, Shardul, why this is not something you would want to see in your backtester.
So I will just give you a quick example. So if you're like trading for a whole year last year, and like you were deep down, like you were betting 100K on every stock, and you were losing consistently, and then out of nowhere on 31st, like we always see the Christmas rally. So if you bet on Amazon, the Amazon it was booming, and in just one trade you made around $1 million. That's exactly what the strategy or the strategy curve looks at. So basically you can see like for the whole year it was constant, and just with one trade it boosted like anything. But what if that one trade never happened? So you might just be on the same page throughout the whole year. So this is not something what you want, just trusting on just one trade or two trades. So this is not something what you want. You want something that is going linearly, like on every trade, you're making something, losing losing something what you can afford, not losing the whole account at one trade. So that is not something what you want.
Yeah, this is a really bad equity curve. You want something that is gradually going up in value. Obviously, you're going to have some dips, and you're going to be running your strategy over a time period that might have been the Iran conflict or COVID or whatever. The stock market went down. You can't help that. So you may see some dips, but this is ridiculous. It went down. We had a huge drawdown, down to 30%. And then some sort of stock jumped this thing up. And then it just kind of chopped around for a while. And then you prayed hard enough and you woke up and this thing just went a ridiculous amount. So this is not great. But quickly you can tell, is this something that's good? And if I go back, the smoothness. So I do a lot of algorithmic trading and I do a lot of using Claude. And let's say I had Claude run through 100 of these strategies while I take a nap. I need him to be able to look at this for me and tell me if this is garbage or not. So I added in the smoothness, which is basically an algorithm that looks at this chart. Well, it looks at the trades and the equity curve and determines if it's a smooth equity curve or not. This is a rough equity curve, which is not great. This is not good. So it's a
We have
rough
two
equity curve.
options in the smoothness. So one is the smooth and second is advanced. Even if you are on advanced level, I'm pretty sure you can just work your strategy through it to the smoothness. But when you are at rough, try to improve your strategy, because like you might not be able to see exactly what the machine is able to see, because it goes through every trade and checks exactly what's wrong and what's right. So you can just trust the like the smoothness level, and not like, if you think that this curve looks fantastic, just try with the smoothness level. If it really passes along what you are expecting, or it's just something fluke.
Yeah, 100%, 100%. So you can now have Claude use that function to just tell you if it's rough or not, which if you're running through 1,000 strategies will help you. Do you know what this little dash line's about?
Of course, that is in sample and out of sample test.
Okay. And what does that mean?
So the thing is, sometimes we just show all the data to the to the algorithm, and it just learns all the data. So sometimes you just train the model on something, and the code literally goes through each and every day, learns everything what's going to be happening tomorrow and after that. But this is something what we came up with, like, which is the in sample and out of sample. So the line, what you can see, the left part of it is something like the model has already seen, and the right part of something which the data has never been seen, and it was never tried on that code before. So this is something very new to the model. So if the model and the strategy is working on the right side, that is in the out of sample test, I'm pretty sure that the model will be working in the forward testing as well. So you can trust the model, but not completely, but you can still trust the model if it's working perfectly how it was working in sample. But as we can see over here, the in sample and out of sample are not matching at all, because when we see in the in sample, it was completely flat, but when it comes to out of sample, it just 2 to 3 trades that completely blew off and take the whole CAGR or drawdown to the whole new level.
Yeah, this is a good example. Don't know why that. So we have a rolling 50 trade profit factor. So I think what that means is it's taking 50 trades and it's trying to plot what the profit factor is. And we want to see a smooth chart. Walk me through what we want to see in this scenario.
So basically, like a smooth strategy, like the ideal strategy, like all the big people or automated strategies that make some good money are always on the upper part. like we can see some green and red parts, like the green is above the line and the red is above below the line. So the red line is zero. So basically, you are not making anything, nor profit nor loss. But when it's the green part, so basically your profit, like your strategy is consistently above the sharp level. And when it's above in the red part, the sharp level is completely like below the market line, which is not what you want. And in this, you can see the strategy is completely going up and down. So which indicates the strategy is not stable, and it highly depends on the market and how it is performing. But your strategy is not making something good decisions on it. It just trusts the market. If the market is good, the strategy will be up. As you can see, the market goes up from 2023 to 2025, when exactly we were having the Nasdaq bull run for the whole
Mm.
year or whole 2 years. So exactly where you can see, just because market supported it, it's in the green. But when you see it's in 2022 and 2025, when there was a good tariff attacks, the strategy completely got devastated. So you can see, like, this is something what you should be carrying, because we need something which is stable, that goes through every market, because the market has different regimes. Sometimes market is up, sometimes market is down, sometimes market is consolidating. So we need a strategy to be in such situations. And if the strategy is something like go in and out, so we need to make sure that the market strategy is forming a stable curve, a stable chart over here, and not flipping up and down every time.
Okay. Yeah, this looks pretty scary. That looks pretty scary. Percentage of profit. So this is kind of cool. So you can kind of see the number of trades and the profit. And it looks like most of these trades over 250 are not that profitable. Is that fair to say?
Yeah.
And it kind of it kind of fans out, right? So I guess what you want to see is, what
We
is it?
want a bell curve distribution over here.
Yeah. Okay. Bell curve. Yeah, this looks really bad. And then we have a R multiple, which a lot of people track R to R value, and this is pretty flat. It looks like a lot of it's just kind of break even, or some of it is, which is really interesting. We have a drawdown history, which is just further. There's no way that you would have held 30% drawdown when the world is on fire, and then a 25, 20, a 15, then back to 30, then to 20. Like, you're in drawdown more than I think you're in profit on this thing. It gives you a top 5 drawdown periods. You were in 637 days of drawdown,
So it's 2 years.
dude. Man, can you imagine going to Christmas? Your mom's like, "Hey, how's that strategy stuff doing?" You're like, "Well,
Maybe I'm not meeting my mom for next 2 years.
yeah." And she's like, "But Shardul, you said you were in drawdown last year." You're like, "Well, yeah, but my model says I could be in drawdown for another year." So that's crazy. Okay, so your drawdown distribution, number of days, 5. What is that? Days versus frequency. Okay, so number of days. So 200 days, 1 frequency.
So exactly, and even in the situation where we don't understand the charts, because even we are working on this, and sometimes even we get confused. So if you are getting confused, you can just ask Claude, what does this chart say? And it
Ooh,
will
yeah,
completely ask
that's a
you
good
in
idea.
perfect. Yeah, exactly. You can just take a screenshot or the snipping tool and just paste it. It's like, can you just explain me what is this? And it will explain you to everything in the plain English.
Yeah, that's a good idea. Let's do that. Very smart. Let's see. Okay. Screenshot. So you can just take your screenshot and just drag it into this terminal and then say, explain what this chart means. Yeah, that's a fantastic point. I'm glad you mentioned that. This is the drawdown duration. It answers one question. When the strategy falls into a drawdown, how long does it stay underwater before making a new equity high? And it tells you how to read it. What is it telling me? There are roughly 11 distinct drawdown episodes over the 5-year backtest. Most recoveries were fast. So that's the healthy part. But the distribution is a long, ugly right tail. Individual drawdowns lasting 180 days, 200. And we just saw that, right? 630-day drawdown. That's insane. The last one is a drawdown that stayed underwater for 20 months. That mean
Yeah.
the mean of the 152 days is misleading on its own. It's dragged up by those few long tails. Most drawdowns were short, a handful were brutal. This is a classic right skewed distribution. So I don't know if he's throwing shade on our backtester or not there, but so what does that mean? This is the visual explanation of the rough smoothness verdict, which I spoke about in a minute ago, and the 25-month plateau flagged in the run. So you could literally just go into an hour-long conversation with Claude on just this one topic. So Claude has all the context of this run. He knows everything about it, and he has all the trade data. So you could go to Claude, which we'll do in a minute, and kind of interact with them. So let's go through this real quick, and then we'll kind of go back to Claude and see what we can do there. Monthly heat map. I don't know how useful this is, but
so it's useful when your strategy is automated and it goes through to and forth every month. So you can just see exactly which months are not completely in your favor or which month you are outperform the market. So this is where you can be very useful for that.
Oh, that's kind of cool. So you would know that January, February, March, April, May, June was a bad month or a good month. Okay, that's kind of cool. So then we have profit versus MAE, MFE. So this is kind of like a scatter plot, and it shows you the distribution of losses and wins, and it also over here as well. Can you give me the 30-second pitch on what these two show you? There's a few up here too. There's a couple that are really light. I don't know if you can catch that on the live stream, but
So that's what
so what?
exactly the equity curve looks at. So basically you just have one or two trades that completely outperforms the whole equity curve. That's what the whole thing you can see in the equity curve and
Okay,
over here.
nice. And then when we flagged that earlier, we saw that it was a huge jump, and we suspected it was because there was probably one or two trades that went massive. And now we can go into the profit versus MAE and MFE, and we can actually see that. And let's zoom in because this is like really light. But one trade got 1,500%. One trade got 2,000%. So this is basically like what they call
Just one trade.
gambling. Yeah, this is like
Yeah.
gambling, but with better lighting. Like you got lucky, and your mom's not going to be too happy when she sees you for Christmas. And then just duration distribution. This is always interesting. How long are you holding these trades? Most of them are less than 100 days. That's kind of cool. Or bars, rather. So we have to keep
Maybe
in
we are
mind, this is
just
a,
getting stop loss keep often.
yeah. And we have to keep in mind, this is a weekly strategy. So bars held means one weekly bar. So you're holding this trade for, I can't really tell, but that's a long period. Some of these trades you're holding for 300 bars. I'm not really good at math, but 300 weeks would be 5, 6.
2011, 2100 days.
Yeah, that's crazy.
So it's 7 years.
That's crazy. And then the profit, most of them are very low profit. So I think you're making more money for the brokerage house than you are for your family on this one. And then this is just the list of trades in case you want to get in the weeds on that. This is a kind of a cool view of winners and losers. It looks like BKNG.
Like the top and the top
Yep.
losers.
Amazon. And then the losers was AMAT. I've done a lot of AMAT trading, AMD. So, and you actually see winners and losers on the same chart, which is kind of interesting. So that may kind of get your brain going there. Okay. Equity path. So this is Monte Carlo, right?
Yeah.
Okay. So
Like,
Monte
I guess
Carlo
the
is,
most important page in the whole PDF.
yeah, okay. So Monte Carlo is a big thing in backtesters. And Monte Carlo basically, and correct me if I'm wrong, Shardul, it takes your trades and it shuffles them around. into multiple simulations to really break your strategy and determine, did your strategy just get lucky? Because if you took the same trade 2 years ago, would it have made money? And a lot of people's strategies are kind of built on previous day, previous week. Monte Carlo busts that out the window, and it breaks them all up out of order, right? So that way, if you look at the Monte Carlo, that will give you better confidence. Now, I do want to flag something. Monte Carlo was a robust, by the way. Robust. I think it was the top Monte Carlo score you could get. The Monte Carlo does look good. So that's a little worrisome there. But did I miss anything in explaining what the Monte Carlo was? Like, why is that important for a strategy?
So when you like roughly, I would say Monte Carlo is something like if your strategy made 15%, like first 15 days you were completely outperforming the market, but next 15 days you just lost what the money you made. So Monte Carlo just makes those 30 days in 10,000 different variations. Like what if the next 15 days come as first 15 and the first 15 goes at next 15? Then what will be your drawdown will look at. So basically, when you lose 15% in the initial days, you just don't need 15% back to be on the same level. You need 25% to be on the starting point of your capital. So that's what the Monte Carlo does for your portfolio. Like it shuffles the order when like the returns came to your account, or like how your trades perform, and based on that you can see exactly how robust your strategy. So basically, we
Okay.
can see in the table like the P1, like 99%. Like if the 99% things go beyond you, like away from you in the worst trade situation, you will lose around 70% of your portfolio. So basically, I wouldn't be putting my 70% portfolio, because just to get back my 70% portfolio, I need to have 130% return just to have the same thing where I started at. So I think that is something problematic.
Wow, that's crazy. Okay. Yeah, once you go in drawdown, you forget that you need to make more than what you drew down to actually start making profit, which is pretty sad. So this gives you a frequency on final equity and a CAGR, KGAR. I'm going to ask Claude about this because Monte Carlo looks pretty good. Equity curve, in sample versus out of sample. What's that mean? Didn't we just talk
I
about
just
that?
explained that in the
Yeah. Okay.
yeah, we
So we
just
went through that. And then this is kind of like a receipt, just total trades, net profit, gross profit, just in case you need that information. And then that's it. So this is a 14-page PDF, and this is kind of the data that we've found that we needed. I can tell you that 90% of the time, I literally just look at this, and this is why I had Claude, or that's why we added the smoothness, because I was spending a lot of time creating the PDF, downloading it, and then seeing that the strategy looked bad. Now, I don't know why we don't have a buy and hold on this. That's kind of the buy and hold flag. I'll have to look at that. Okay. I want to ask Claude some questions. One is this strategy looks really bad. Why
you
is the
can
Monte
just give the
Carlo?
whole PDF.
Well, I really want to ask this. Why does the Monte Carlo look so good? Return robust. I'm interested in that question. And I'm going to turn my fan on. Well, no, I can't reach it. Good instinct. Let me pull the MC implementation so I can explain this engine's logic and not the generic answer. Okay. So he's going to go through and just read the code that we wrote. Hopefully there's no problems with it. Okay. Okay, they're measuring orthogonal things. Blah, blah, blah. The Monte Carlo takes 317 realized trades. and then 1,000 times draws 317 of them at random with replacement and rebuilds an equity path. It scores 3 things. So the score is no flags. Given the exact bag of trades, was the result just lucky ordering? With a profit factor of 2.5 across 317 trades, the bag is genuinely profitable, so almost any reshuffle stays profitable. What? The Monte
So I
Carlo
can
throws
explain that.
away. Yeah, so walk me through this because I'm starting to get confused.
So the thing is, like the losses what we have are tiny. So and the trade what we just saw, like just making in single trade, 2,000%. So basically, no matter what the trades come at last or first, we are gaining all the money what we have lost in the single trade. So that's why we are not losing 100% of our money because the losses are pretty much small.
Okay.
So we are never going out of like bankruptcy. That's the thing.
How much money did we make?
So,
445,000. So I mean, you made money
but
on this, but yeah, it's pretty
but
crazy.
when you
Okay.
check how much that trade just made one trade money, and as compared to the whole portfolio, it will be completely devastated. Like I think $400K will be just made by with that single trade, and just 23 or 13K to
Okay.
the whole
Well,
other trade.
so let's see if that's true. This strategy looks like it makes money on a few big winners. Remove those winners and rerun the strategy. Let's see if you can do that.
Yep.
So what was the one thing that you've learned from Masters of Data Science? What's the one thing that you learned? Save me from going to
But
2 years of graduate school.
of course, like trust the data no matter what your intuition says, because that's what every trader gets into, like over trading, revenge trading. Like I
Mm.
think that might be going down, but like the thing problem is something like you can't predict the market, where the market is going. So like whatever you think doesn't bother the market if you're thinking good or thinking bad. You might just be thinking why your thinking comes up. So I think the whole 2 years are backed by the data. So the thing is, if your data is telling the market is going back down, so you should be trusting it, because that's how it has been trusted for the last 20 years. So you are trusting the whole last 20 years and not just your intrusive thoughts. So that is
Mm.
what something I can save your time with, because you might be thinking from, because this thing has to go up from here, because you never know, it can just go down and just be zero at some point. So you can just
Mm.
trust your gut feeling that it should go up or it should go down. You should be always backed by the data. Like what does the data say? What has happened previously? Can you back with something that what happened in the back? Because you never know when market crashes, when the market will go up. So it's all about what you can be more probabilistic with.
Mm-hmm. No, that's very true. Trust the data. That's why data is so important in quant, and people spend a ton of money on high quality data. We spend a lot of money on Norgate data, and I did not like writing the what is it? There's like this phrase of you cry once. Like I cried when I paid for the data, but I felt better when I ran the strategies, knowing I had legit data. There was no survivorship bias. The data was good. So that we run our strategies on all kinds of data. I got Polygon, massive. People, I think Shardul uses Alpaca for some stuff. Some people use yfinance, and then some people can just throw their data in a Parquet file and just throw it in there. You can even use CSV data in the repo as well. So Claude says this is the answer and it's damning. Uh-oh. So let me verify one thing because they look suspicious. Okay, so he's putting his Sherlock Holmes big comical magnifying glass on. So see, I don't want to spend time going through the trades, finding the big winners, taking them out of the data, then running a Python command. I can just talk to Claude sitting on top of this. He has all the context from an hour ago, and he has a huge context window. We could keep going on this for a while. But for right now, the biggest question, which Shardul and I saw right away, which is where are these big trades coming from? So we'll see what he comes up with. Also, I want to know why the buy and hold is not showing up on the report. I don't know if that's a bug or not or what. So let's figure that out.
I had the same issue with my thing as well. I think it's about SPY. Like it is not tracking the SPY because we have by default SPY in the buy and hold thing. So sometimes it has a problem with us fetching the data.
Okay, so we'll fix that. All right, I think he's just grepping through the output possibly. No, he's flagging BKNG, which I called that a minute ago in that list. Let's go back while he's doing that. Scroll down. Okay. BKNG, where's he at? I thought I saw it here.
First one.
Oh, yeah. 2,000% profit. So I think what he's going to do is he's going to remove BKNG and Amazon.
Remove first two trades.
Yeah, he's probably going to remove that. He's still busy. I think he's going to remove that, and then we're back down to like, this is basically like an AMD ticker strategy. That's funny. You're like buying and selling AMD for the life of this strategy. Which,
I mean, to be honest, it can just be profitable with just a single stock. If you can just hold Nvidia when it was $3, you don't have to look at any other stock.
Yeah, that's true. Which we're running this on NASDAQ. I mean, you would have to. NASDAQ has seen a lot of bull runs, so one tip I've heard is take a strategy and then run it on a whole nother ecosystem. And if it still runs comparably, then you have a legit strategy. And I don't know how many times that I've ran it on one ecosystem, one basket, it looked fantastic, and then I move it over to another and it looks like garbage. And I'm like, So it could be a specific ecosystem strategy. Like there's hedge funds and family offices that do that. But you don't have to. Okay. These are data artifacts, not real winners. Oh, stock splits. Both entries span stock splits with price adjustment none. Oh, interesting. Okay. Okay, so we had a data glitch because we did not flag price adjustment in the config. That's interesting. Okay. So he's going to do this all over again, removing the stock split. That's interesting. Okay. We should probably ship that as default. Okay, so we're going to rerun it. We'll see what it comes up with. Yeah, we need to set that as default in the repo. I'm just going to say, when done, create the PDF. You can kind of talk to Claude as he's doing stuff. You're just going to kind of queue that up, which is nice. All right. And while we wait, I'm going to have a word from our sponsor.
Prop challenge or leveling up your own trading. SignalDeck tracks every trade in R with Quant level analytics. Prove your edge. Free. Link in the description.
Okay, and we're back. So it looks like so I was just telling Shardul about how he should be a professional podcaster. Which we'll talk about that later. So that's the honest picture. So the PDF is being generated. So now that we're taking away the what was it? The total return. Removing the winners. The top trades weren't real. They were just data artifacts from unadjusted price stock splits. That's really interesting. So let's see what the PDF looks like now. Oh, sad town. 13% return. You're still at the 36% drawdown. I like that. Your Sharp is 0.01. You almost worked hard to make this as bad as it is. And for every dollar you risked, You made $1.09. Wow. And when the tax man came, you had nothing. And then you made 13,000 for holding this all the way from 2022. This is really sad. Your win rate is 35. Wow. Okay. So I think we learned something, which is if you're running this on stocks, the stock splits are going to cause you problems. And make sure to have the total return set to, or the price adjustment set to total return. You may have a strategy that searches for stock splits, right? But we're not trying to do that right now. We're just trying to run it on a honest stock ecosystem. So once we actually took away the stock split, this turned out to be a really bad strategy. Really bad. Really bad. So what does he say? Let's see. Same strategy, same window. Removes the phantom winners, air quotes. The strategy has no edge. Okay. We know that. And I think anybody looking at the strategy could know that. One more thing. Let's ask Claude, what would you do? What would you do to make this have an edge? We don't want to rely on Claude to do everything for us. Like obviously we should use our brain. But it is interesting, basically like a colleague in the office, and you kind of lean over and you're like, hey Craig, look at this strategy. It looks like garbage. And he might say something that might get your brain going.
You never get judged.
Yeah.
No judgments from Claude. So you can just be asked them as you want and just ask silly doubts. Not a problem with that. Nobody knows what you're asking. I mean, at least I ask all the silly doubts.
Mm-hmm. Yeah. I learned early on. Well, I didn't really, in my 20s, I was like, I should never ask when I needed help. And then in my 30s, I learned you have to ask when you need help. And then I asked all the time, more than I thought I should. And I learned more when I ask for help. But anyway, honest framing, you're running a counter trend mean reversion signal on a strong uptrend momentum names. Okay. So here's what he would change. Fix the exit, highest leverage. Stop exiting on the opposite divergence. Okay. Add a regime filter. That's always a good idea. Require confirmation. Okay. He's giving me a bunch of stuff. And just for sake of time, he is so excited. Claude is so excited. He wants to just go ahead and do this for me. So I have some options. And you can just use your arrow key to just go up and down, but you could do the full version to his recommendation. Throw a regime filter in, confirmation trigger, ATR, trailing exit, long only. That's pretty cool. Or you could do an exit only. You could run this on Norgate data, which would actually be pretty cool, but we don't really need to do that on this call. And then broader universe, that's also another thing. So, I mean, this is probably hours of just having fun. I'm just going to go and do the version 2, and then I think we can call it. I just want to see what that version 2 looks like. So Claude kind of comes in and kind of gives you some suggestions. You can go back and forth and say, well, I don't agree with that. What if we did this? You know, if we weren't on a live stream and I had 5 hours, I would probably run this and then go back and run it on different ecosystems. And then I would run it on a weekly, and I would run it on a 4 hour and run it on a 1 hour and see if there's any edge anywhere. And probably what's really cool is you can tell Claude if you, this is a little advanced, but Claude can help you do it. You can connect Claude to your Google spreadsheets, and you can just start having Claude saving things into your spreadsheet for you. And as you go through, you can say, oh, okay, well, put all the data in that spreadsheet. And every time you do it, update the spreadsheet, like that type of thing. So that way, if you do head out of the office for 8 hours, you could have a spreadsheet with all the data. Or let's say you're doing like 9 months of research. All this data could be saved in a spreadsheet just as easily as just typing in, save it to the spreadsheet, which is really cool. Okay. So he's just doing his thing. Pretty nice. Okay, so we got the results back. It did basically an A/B test, which is pretty cool. So it took the original and it compared it to the next one. So again, Claude has all the context, so he can just keep this in his brain and just tell you stuff. The fixes work, and they prove the diagnosis was right. And he's going to be straight about the ceiling. So makes me feel good that Claude's being honest with me. I would hate to see what would happen if he lied to me. P&L went up 2.2x. Max drawdown got negative 67% less. That's amazing. So 12% drawdown. That's crazy. Calmer went up 6x. Profit factor 51%. This is really good. The Sharp is still low. The win rate is pretty much the same. Okay. Concentration problems fixed. That's good. But the honest ceiling, B2 is legitimately a better strategy, but it still loses to a buy and hold. Okay, that's fair. It's now a risk-controlled positive expectancy system rather than like a standalone strategy. That's kind of cool. Okay. And then, so what we're going to do is we're going to end it here, but I'm just going to ask them, give me some ideas. Don't implement of where I should go from here. And if you're watching along, and we'll put the strategy on the blog in the description. So if you want to look at it, we'll give you the PDF. You can check it out. And in that strategy, maybe you can pick this up with the backtester and continue the research. That would be kind of cool. But if we had more time than we have right now, this is probably where I would go with it. Or I would just kind of stop, think about it, come back or whatever. So where he would point the research, evolve the divergence idea. The core problem is long only counter trend. Signal is fighting index beta. That's a good point. So kind of go down the market neutral, long, short, cross-sectional instead of per name timing. That's a good idea. Demote it to a filter, not a system. That's a good idea. Another option is pivot to a better hunting grounds. So be honest, divergence on mega caps may not be the weak edge. So we have like three things. Get off Polygon for backtesting depth. Yeah, we've only ran this on a 5-year period. That is a good point. So if you're running a backtester, you want to have as long a period as possible, especially on a weekly chart. Especially on a weekly. We only did this on a 5-year period. Actually, real quick, run this on a daily. I just want to see what this looks like on a daily chart, and then we'll call it.
Yep. Makes sense.
Yeah, but yeah. So while he's doing that thing, there's a lot of discussion, and I'd like to have Shardul's comment on this. But we bought data all the way back to 1990, 93. Some people say you need backtest data all the way to 1973. Other people say, well, the market's different now. We have algorithms. It's not the same market as it was in 1990 or 1980 or whatever. So there's kind of some debate on like how far does your backtest data should go. What are your thoughts on that, Shardul?
I think it depends on how your strategy looks like. If you're doing something like a scalper, or like you're just making some money for living, like just going out in and outs in an hour or within minutes. So I don't think you need much, because going that back, that will be completely devastated. Like you don't have the resources to do all this backtesting, because if you're just doing some small backtest and like some small time frames, like if you're just dealing with 1 or 2 minutes strategy, I think you're good with just 5 to 6 years of data. But when you do exactly what we did, like a daily or weekly, so I'm pretty sure you need at least 15 years of data, because that's what gives you the whole drawdown period with 2008 crisis and 2020 COVID and everything, all the other like drawdown crisis. So you get tested with your strategies and how it will work when the whole world is against you, or the whole market is against you. This is where the whole big picture or the whole test will be for your strategy. So I think that depends on your strategy alone. But when it comes to regime things and like how exactly, because the market was not the same what right now it was. But the thing is, when you look at the big picture, you can see that the future market is not definitely what we are currently having. So you can't be just trusting the current market and posting the same strategy in the future. So you can't just time the market. You just need to have as much as you can. So there is not for me at least, I can just trust with the data as much as I can and as far as I go in the past and do the back test. If it's work in that market and all the market it has seen, then I'm pretty sure it can be robust enough to see the future market as well. That is my whole take on that.
Yeah, that's a good point. That's a good point. I think going back as far as you can is a good hedge. Worst case is you just remove it. But don't do your back tester on TradingView on like a year's worth of data. Just don't do that unless you're just roughly running an idea. I mean, you got the back tester, you got Claude. You should up your game a little bit. Even if you use yfinance, it's good to have a good robust system. Just because you ran it on TradingView does not mean that you can now throw your money in the market. You know, kind of treat this like a business. It's boring. It's mostly research driven. Having a strategy on a 6-month or 1 year or 2 year time frame is not the confidence I think that somebody's going to need long term. But and this should work. This repo should work for 1 minute futures, forex. Like we said earlier in the stream, you could put this in the Indian market. So it's pretty robust. And don't think you just should work this on a weekly. We just came up with that out of the air. We've been over at our family office. Shardul's been doing a lot of forex, a lot of futures, 1 minute, 15 minute, so you have a wide range. You can just flip the flag on what time period, which is pretty exciting. So don't think this is just for swing trading. This could fit your strategy however you wish. All right, real quick, daily results, negative 25% P&L on the version 1 and a 19% P&L on version 2. It still does not beat Q, and the Sharp is absolutely abysmal. Daily makes it worse, not better. That's actually interesting. I've learned more from the strategies that don't work than the strategies that do work, because this is real data. Now we know that this strategy is worse on daily. What does that look like? Which is pretty interesting. V2's filters over defend on daily. So we can kind of tell this is weekly versus daily. So Claude puts it in tables for you. He summarizes it. You can talk to Claude. It's pretty exciting. So I think that is a good intro of kind of where is a good stopping point here. So what do we learn in this? One, Shardul cannot go to his mom for Christmas when he's negative. What is it? 600 days drawdown or something. So I don't know what he's doing, but he's not going to mom's house. Secondly, is with Claude, you can put it on top of a backtester like we wrote, and just kind of play around with it. Have ideas, play around with the ideas, save the data, and see if your ideas actually have legs, right? What did you learn from this live stream, Shardul?
Like, definitely, like, you can test no matter what, how many strategies come to your mind. So like sometimes you know that the strategy definitely works, but you just don't know exactly where it works, when it works, because you might be following some like YouTube videos for some strategies, but you can't just tell Claude to find me a strategy that can print money. If that was the case, I'm pretty sure I was a millionaire by now.
Yeah, we
But
wouldn't. Yeah, we would not be here. No offense to the person watching this, but we wouldn't be here. So
yeah, so
yeah,
I'm pretty sure you will be having your own versions of your strategy that you think that would be working perfectly fine. But before that, I would like you to test this out, because you might be having many number of strategies on many different versions. Maybe you might be coming up with some very like a funny strategy, but you will be surprised how the strategy works. Maybe that may be something that will be making money for you, because that was something I came across with. Even I did some research for a month or two, and I just typed a rough idea what I had in my mind and just let Claude go through it. And to be honest, I was surprised that was one of the best approaches I typed, and I got the result for like from the backtester. So that was something what's out of nowhere. I got it. So you might never know that you might just get something gold just searching for some stones.
Yeah, that's a good point. Yeah, I mean, research is boring, but it's also exciting, and you never know what you're going to get out of it. So hopefully this was beneficial for you. We're going to put the link to the strategy, the report, these 4 different strategies. We'll put them we'll just make a blog post. We'll put that in the description. I'll put a link out to Shardul's LinkedIn. If he's on X, I'll put that on there. You can catch me on X, LinkedIn as well. Yeah, so this was exciting. We'll put a link to the backtester as well. And then if you have any comments, leave them here. Always reach out to us on X or LinkedIn. And yeah, I think we'll probably do this again. So thanks for your time, Shardul, and I'll catch you later.